me a great pleasure now to bring on board Prashant Khemka, founder at White Oak Capital. He's been missing in action. He's been missing. Kahan the Prashant bhai? Long time no see.
The markets keep you busy. Nice to be here on your show, Nikunj. Thanks for having me here.
Really, I mean, markets were keeping you busy. Nothing is happening in the market only from last 1 month.
Yeah, it's as such business as usual. But no, very exciting time for all of us to be in. A lot of interest globally as well as amongst domestic investors in the equity markets. So it's always fun to be, deep in the trenches. So very happy to be here though, Nikunj. We'll be more regular in the markets going forward.
Look forward to that. I mean, you've just managed to create such a master franchise. Some of the stocks which you've picked up over the years, they've just been so classic that everybody wants to understand your thought process. So let's start with a very basic question. We've seen a bout of volatility, a sizable correction in small and mid-cap stocks. Do you think markets are looking healthy enough?
Yes, I do think, Nikunj, see, as you've been a veteran in the market, if you go through a longish enough period without volatility, the market becomes all more susceptible for a bout of volatility. And what you saw in March was precisely that, in my view. We've had since March of last year, so almost 12 months ago, the market's been more or less moving in one direction, particularly in the smaller cap segments. Yeah. So I think this amount of volatility that we saw earlier this month is very much part and parcel of the equity market business as usual, and I actually think of it as very healthy. And if we keep having such at regular intervals, then it takes some of the what is now become fairly popular word. It takes some of the froth out of some of the segments of the market. So overall market, I don't think was unfairly valued or out of line. But yes, there's certain pockets, which in any market, certain pockets tend to get ahead of themselves, and such volatile or corrections help them bring back in line with the rest of the market.
You've run a portfolio which, in a sense, has been centered around banks. That's one wheel. So most of the AMCs do have a large exposure to banks. So I will not get into why, because that's the easy one to understand. But the odd one out, when I say odd one out, which is a standout, is your exposure to some of the consumer durables or consumer discretionary stocks. Not durables, actually staples. Names like Titan, Nestle. Traditionally, these are expensive stocks, and you own them for years now. Why is that?
Certainly, Nikunj. So see, whether I'm not going to specific names, some of these could be classified as discretionary, some are classified as staples and vice versa. But see, in our portfolio at all times, Nikunj, we have a very healthy mix. By design, we have a very balanced composition across all sectors. You would unlikely, unless the team is running some specific niche strategy, in most of our strategies you'll find a good balance across all sectors. So we don't take any significant, in fact we don't take any top-down sectoral call, and we try to limit any bottom-up biases that are created from a sectoral perspective. We try to constrain that. Yeah? So you'll always file in our portfolio consumer staple names, technology names, discretionary names, materials names, banking, financial, real estate, and healthcare across the board. Having said that, yes, there are certain sectors in which we've historically found more bottom-up ideas, and they are private sector financials is one of them, and technology and healthcare are other areas, and consumption as well. But we have a lot of ideas in the industrial sector as well. as an example. So while some of the largest names might come from a set of sectors, what you can't ignore is the long tail that we have. Beyond the top 10, you might find a lot of ideas from variety of other sectors. Maybe some of the names that you highlighted are the largest names from some particular sectors. But beyond the top 10, you'll find a very healthy balance from across all sectors, Nikunj. And they'll be at all times. Yeah, it's the names may change, but the sector representation pretty much is at all times, with some exceptions, Nikunj.
Given a commentary which suggests that over the next 12 to 18 months, White Oak is aiming at opening about 100 branch offices across the country. I want to understand, as an insider who has been in the asset management business for a very long time, how is the asset management and related plays looking? You have some AMC stocks in your portfolio, you got in way early, they underperform, and then suddenly last 6 to 8 months they are shot up. So what's the right way to play the asset management structural story here? Is it right to go with the distributor, the mutual funds, or direct asset managements, or some platform company that provides services to the entire capital market story?
So, a very pertinent question, but truth is that Ashish Somaiya, who's our CEO, is a lot more in charge of the domestic AMC business and distribution strategy. I would not be able to do justice to the question, and might in fact not correctly characterize what he's doing. But yes, I am aware that they have a very deep distribution strategy, and I'm aware that they're already up to approximately or close to 50 branches. And the idea is to, over time, build the presence across the country and deeper beyond the B30 markets as well. And
Clarify
that's
to you.
to my
What I
understanding.
meant was, that was just a reference point. What I meant was that as somebody who's seen the capital market evolution of India, and now the story is becoming much more structural. In your view, what is the right way to play because there's a bouquet of stocks available. We never had mutual fund distributors listed. Now we have a bunch of capital market related service providers, platforms. We have a bunch of AMCs. So from your vantage point,
Understood.
which look the best?
Understood. No, thanks for that clarification. So, see, we as a team look at all these businesses, each one of them. We often say that, and tying to the earlier conversation, we were talking about sectors, we were talking about now sub segments within a sector or within an industry, which is capital market intermediary. So we look for areas where there is a strong capture of value creation. I can't go into specific, but there are capital market intermediaries which enjoy a very strong market position, highly profitable, and those are some of the names that we've owned for considerable length of time and have very large positions in our portfolio. Asset management companies also we continue to evaluate. At this point, I'm not sure that we have any one of those in the AMC portfolios. Certainly in offshore portfolios as of now, we have very limited exposure to the asset management space. But we do have distribution companies, wealth management companies, as well as some of these other intermediaries which service the asset managers and wealth managers. Unfortunately, can't talk about specific names, as you can well understand.
Okay. So, Prashant, let's understand the importance of election. While markets are not worried about what the election verdict would be, do you think from a market standpoint, more than the election, the budget is of importance and we could see a swing move this way or that way depending on what we hear?
A very good point, Nikunj. I think that the next major event to look out for is the budget in July. I think, look, the election is also very important, particularly from a foreign investor's viewpoint. I think the domestic investor base has already concluded and acted upon that conclusion um, uh, regarding elections. But I think amongst foreign investors, there's still a large segment which wants to see the event behind us. They're prepared or have been preparing to act, but they want to see the event behind us before taking action. So putting the event behind on June 4th would be an important milestone, if you will, not taking anything away from that. But beyond that, I think the budget of July would be very keenly watched to see what the priorities of the next government would be, how aligned they are to the last few years, whether they take those policies forward in a in a in a with greater momentum, or is there any stalling, and what implications that would have for longer term economic growth as well as capital markets. So, Nikunj, very much agree that the budget in July is now the next very important event for the markets.
Too many manufacturing or so-called energy transition names, at least in the holdings which we have. The top holdings do not include a great manufacturing name, excepting L&T. I hardly see any pharma names. Are you staying away from these so-called new energy manufacturing themes?
Not at all, Nikunj. And I would strongly encourage you, Nikunj, to look at the entire portfolio and not just the top 10 names. Because look, top 10 names would at all times, if you look at historically 10, 20 years, wherever I've managed portfolios in the past, top 10 names, there won't be so much difference. They'll come from a certain set of sectors. I doubt at any point in time you'll find industrial names amongst the top 10. Leave aside one or two, exception. But once you go down to the next 25 and the 25 behind that, I've tended to always have, and our team has tended to always have fairly large number of names. And then that's a topic that I've talked about team number of times, not to bring that up here. But if you add up those names, mid caps or small caps are not likely to be in the top 10 names. But a lot of the industrial names, let's say capital goods names or various other sectors, you talked about healthcare or many other sectors, they would feature in very good measure beyond the top 10. And collectively, when you add up, they represent a big chunk, sizable chunk of the portfolio, Nikunj. And some of the greatest alpha opportunities, as you know, alpha opportunities in India are available across market cap spectrum. But it is a known fact, including our own performance and empirical evidence that we have about our own performance suggests that the richest by magnitude of alpha opportunities do reside in mid caps and also in small caps. And these sectors, industrials, materials, and so on, they're very rich. Consumer discretionary as well, they're very rich in mid and small caps, whereas the banking, IT is rich across large, mid, small. But yes, we have a lot greater exposure to some of these sectors in mid and small caps, whereas large caps are more dominated by the financials and the consumer staples and so on. Nikunj.
Let's talk about the starting point and where we could head in next 3 years in terms of your internal return assumptions. If the starting point is, let's say, 1st of April 2024, 3 days from now, and if one is looking at 3 to 5 years, do you think in a classic equity diversified large cap fund like yours, there is a strong probability of a 12 to 15% return even after the recent run up? Do you think that could be there is 80% probability of this?
I would expect that, Nikunj. Yeah. So from market, our expectation is usually not very different from time to time. Over the next 3, 5, 10 years, it's like, if you flip a coin 100 times, your expectation would be 50 heads and 50 tails. And that expectation would not change, would be the same 20 years ago, 10 years ago, today, and 20 years from now. So our expectation from market is somewhat similar, that the market return should be nominal GDP plus dividend yield. Nominal GDP over the next 5 to 10 years can be expected to be low double digits. 6 to 8%, 6 to 7%, if you want to be more optimistic, 7 to 8%, real GDP growth, and a deflator of 4% or so. So call it 10 to 12% nominal GDP growth rate. Add to that, dividend yield, remove taxes, you'll get back to about 10, 11% kind of return from the market. And I would expect our team to generate alpha commensurate with what would put them in the top ranking of the peer group, which would then suggest somewhere closer to low to mid-teen returns, as you pointed out, Nikunj, from our team. But market returns of low double digit and low to mid-teens, then from the team would take it to amongst the top ranking of peer group.
So hypothetically, if you get a call after this show, Prashant bhai, watched you on ET Now, loved your interaction, here's my check. You're free to invest for next 3 years. No question asked. I'm happy to digest a 15-20% volatility, but I'm looking for absolute return. If you get a call like this, what would you do? How much indications would you tell that client?
How much indications in terms of return expectations?
हाँ भाई रिटर्न की बात ही करेंगे ना और क्या करेंगे आपसे?
See, return expectation in that case, look, if you want higher return, market return would be the same across large, mid, small. There is no evidence from anywhere in the world, empirically speaking, that small caps outperform large caps or vice versa over extended period of time. And I'm a believer to expect going forward, you have to expect the same return from large, mid, small. Having said that, alpha opportunity is higher in mid and small. So I would recommend, if you're happy to digest volatility, oftentimes, while it may be true for you, Nikunj, oftentimes a lot of people think they are fine and they're happy to digest volatility until the volatility hits them. Yeah. So I'm assuming that you are truly happy to digest volatility. In that case, I would recommend a mid-cap fund, as there is the best, and obviously mid-cap fund also has the ability to invest in small cap to considerable extent. And there I would expect, compared to a market return of low double digits, more a mid to high teen returns compared to the standard all cap fund where I said low to mid teen returns. I would expect in a mid cap fund more a mid to high teen returns over the next 5 years or so. I'm waiting for your check now, Nikunj.
All right, I'll definitely ask Nikunj to, connect with you regarding that check which he was talking about. But thanks very much for your time, Prashant. Look forward to see you often from here on. This was a big gap this time round.
Certainly, look forward to greater interaction going forward. Thank you.
Indeed. So that was Prashant Khemka of White Oak. But
if you like this video, then like, share and subscribe to ET Now.